he actually exposed pockets of corruption and pockets of over leverage. We might still be living in an FTX world if we got the cash Bitcoin ETF on time. He was wrong. He did it inappropriately. He lost the lawsuit. But weirdly, he opened up a fissure, if you will, and all of these over-levered or these corrupt companies imploded, and it set the base for really good building and growth on an unlevered crypto story, going from 16 to where we are now. Digital assets are becoming a core institutional allocation. That is happening. Talk to Robbie Mishnick at BlackRock. Talk to financial consultants, financial advisors. That is happening, okay? The blockchain, if you follow Larry Fink around, he is literally on a bully pulpit standing there talking about the tokenization of assets. And so, again, the blockchain is quietly going to replace the financial plumbing that's going on. We're already seeing things like tokenized treasuries.
Scaramucci maintains that the core fundamentals of Bitcoin have never been stronger, but the short-term pain was inevitable. He reveals the hidden forces behind the current crash: the systematic liquidation by TradeFi-linked groups, massive selling by Bitcoin OGs, and surprisingly, the political impact of a meme coin.
I see this thing very, very long term, but let's just step back and talk about some things that have happened. And so, you know this and I know this, but what does happen is whatever you think is not going to happen will happen. So the trade was set up for, we're going to 150, 200. We had an explosive post-Trump election number in November. We were in the 60s. We shot right up to 100. And then, we had our little correction in April. Then we shot back through those numbers into the 120s, And so people were like, okay, we're set up and we're on the march to go higher. But what happens is the unexpected. A lot of OGs in the space sold. Yeah. And I don't know the exact data. We could go over it together, but there were OGs that said, yep, I've owned this thing since 2008, 9, 10, 11, whatever it was. I'm going to buy a yacht or a piece of a sports team. And so we were absorbing that. But on the road to absorbing that, there was some over leverage in the system. So when Trump came out with that China tweet where he said that he was upset with the rare earth deal, it pulled a pin in crypto. And that happens when you have too much leverage in the system. And so you had the massive deleveraging. I watched the Tom Lee interview yesterday with Brian Sullivan 3 times last night because I really was trying to understand what he was saying. And I think he's generally right. But I think Tom got stung by some things. He was a little flat-footed yesterday. But if I took out the Mooch decoder ring, and I said what Lee was trying to say is that there were operational difficulties. It really feels like to me that a group linked to TradeFi, I don't know who, but a group linked to TradeFi got hurt, and they began a process of systematic liquidation of inventory and clearing out things alongside of OG selling, which led to, whether people like me saying this or not, it's a garden variety, Scott, crypto correction. It's a garden variety Bitcoin correction. The altcoin stuff is separate. Okay, so my opinion on the altcoins, and again, some people in crypto who love Donald Trump are not going to love me saying this, but I think he crushed the altcoin market. And I'll tell you how he did it. He entered the altcoin market with a meme coin prior to the inauguration. It sucked a lot of liquidity into that meme coin. Then that meme coin busted or combusted like other meme coins are wont to do. And he caused a regulatory slowdown. If you had said to me after November, what's going to happen in crypto, there's going to be a bipartisan, particularly younger people in the Congress who don't want to go up against crypto PACs or crypto billionaires, are going to give up the ghost. There's no non-crypto voter, Scott. And so, they're going to give up the ghost. They're going to be pro-crypto or find propitious regulation pursuant to crypto. But I think the Trump meme coin stung that. It stunted that. A lot of Democrats have dug in, and we've made crypto a little bit more partisan than I would have expected which is why you don't have both pieces of this legislation that we expected to be out already. So I think that's created some uncertainty, and it certainly hurt the altcoin market. So those are my comments on all this. Now the question is, am I right? Are we going to 150, or is Peter Schiff right, or are we going to zero? Okay, and so what I love about Peter, every time something happens, he comes out of the woodwork. Even though he had the chance to buy Bitcoin at 10 cents, it's now 84,000. He's right, everyone else is wrong. And so it's part of his marketing shtick, and I get that. But if you tell me what do we got going for us, just three quick things, because I wrote these down. If you don't mind, I'll just share them with you. Digital assets are becoming a core institutional allocation. That is happening. Talk to Robbie Michnick at BlackRock. Talk to financial consultants, financial advisors. That is happening. Okay, the blockchain. If you follow Larry Fink around, he is literally on a bully pulpit, standing there talking about the tokenization of assets. And so again, the blockchain is quietly going to replace the financial plumbing that's going on. We're already seeing things like tokenized treasuries. We're seeing things. I tokenized a fund on Avalanche.
Yep.
Okay, and I think you've got Avalanche and the subnets of Avalanche, Solana. You've got things like Ton, even Ethereum, are going to be part of the infrastructure and the financial rails, whether people like it or not. And let's talk about Bitcoin for a second. The supply shock in Bitcoin, in my opinion, is now structural. Okay, you're at 19.7 million mined. Okay, so you've only got 1.4 to go. Okay, ETFs are being bought by sovereigns. The halving, again, we're gonna have another halving before you know it. I think that's going to also help the supply curve of Bitcoin. And so for me, I don't know. I'm watching deleveraging, and I'm watching a little bit of a tech wreck for crypto, which is ahead of the tech wreck for stocks. And I like it. I'm not really amused by it. I'm not really plussed by it. I'm not ready to pull the alarm bell yet.
Had the spot ETF been approved on time, the market might still be operating in an FTX-like world of systemic corruption. Gensler's delay created a fissure that allowed over-leveraged and corrupt companies to implode, setting a cleaner, deleveraged base for the market's growth from the $16,000 lows to where it stands today. This latest implosion, though painful, is therefore a strengthening event.
If you and I were on this program together and it was January of 2023, and let's say you took out a crystal ball and you looked at me and said, Mooch, November, it's going to be the 21st of November, and it's going to be 2025, and this $16,000 Bitcoin that we're looking at is going to be 84,000, it'll be 5x. I'd see it in my crystal ball. I would have given at least one testicle for that, possibly two and a kidney, okay? And so for people to get crazy about this, what are they talking about? Okay, well, you and I were underwater getting our asses kicked
Oh, it was so bad.
less than 3 years ago. Okay, but Mooch, it was at 124, so we should now be in a depression. So, that's how I see the whole thing. Let me say something that buttresses you. So this is sort of a weird thing to say, and it's somewhat contrarian. Weirdly, Gensler actually helped us. Just hear me out for a second, okay? I thought he was the worst SEC chairman ever, but because of his delay of the cash ETF, the spot Bitcoin ETF, he actually exposed pockets of corruption and pockets of over leverage. We might still be living in an FTX world if we got the cash Bitcoin ETF on time. He was wrong. He did it inappropriately. He lost the lawsuit. But weirdly, he opened up a fissure, if you will, and all of these over-levered or these corrupt companies imploded, and it set the base for really good building and growth on an unlevered crypto story, going from 16 to where we are now. So if it got over-levered again, which it likely did, this implosion, I will submit to you, Scott, is much better for us than people think, because now if you're telling me we're basing out in the 80s and a lot of the stuff that was wrecked is cleared out of the market, and there's been $4.5 billion worth of OG selling in the last 6 weeks, because that looks like what the numbers are, and that's already past us. I'm telling you, those are good things. And as a TradeFi person and an institutional person, I can tell you that I look at those OG people like venture capitalists in a stock at an initial public offering, meaning when the venture capitalists come out after their restrictions are over and they come out and now you have this brand new ownership base of something, it's typically very good fundamentally. So said differently, you want less concentration of ownership in Bitcoin and more diversity. And I think we're getting that, plus the unlevered or the deleveraging that took place. So those are reasons to be very bullish if you're a long-term investor in Bitcoin. So I'm a buyer this week.
This is the heaviest buying I've done in as long as I can remember.
Okay, but I'll confess to you, I bought earlier in the week, and I thought I was patting myself on the back, Melker, at 93,000. Okay, so obviously I didn't catch the bottom, but I'll probably buy some more next week. Okay, just want to see where things settle out, and I've got some firepower, and I want to own Bitcoin for the next 20 years. If I'm on the planet, I want to own Bitcoin. So that's what I intend to be. I've seen a lot. Listen, this is my 9th bear market in life. I started in this industry in 1988, so I've got 37 years into the industry. I guess what I would say to you is the market, less the Mag 7, I get that number. Okay, because if you pull out the Mag 7, the market has broadly, the S&P 493, Scott, has underperformed,
right,
and there is fear there. And so then you're looking at the Mag 7 and you're saying, whoa, will the Mag 7 present a problem for us? Meaning, are there pockets of bubble activity, AI bubble activity, et cetera? I think they're somewhat connected, but not 100%. I think the disconnection really was the leverage in Bitcoin and the leverage in the crypto market, which caused a cascade last month, and we're getting the aftermath of this month. But if you said to me, let's say I just landed from Mars, had been out of the market for 5 years, and you were debriefing me, and you said, hey, we've got an administration that's pro-friendly to crypto, likely to get some legislation passed. There's 11 ETFs that cropped up, BlackRock having the largest one. Bitcoin went from 16 to 126. Anthony, it's now back at 84. And the fear index is 7. Okay. And the overall aggregate index, if you marry the stock fear index, Scott, with the crypto index, is 14. These are literally all-time lows. I'd be looking at you saying, okay, I gotta raise some cash here, and I gotta buy some Bitcoin. And so that's what I'm doing. And so, again, you got to step back from these things. But listen, if I bought Bitcoin, I had my first Bitcoin, I bought at 126, let's say, or 125. My message to those people is, okay, if you have some dough, average down here. This is a good opportunity. But what happens is people buy, and then if it doesn't go in their direction, they get skittish or they get nervous.
Yeah, I mean, Peter Brandt once said to me in an interview, he said, I tell my son, buy a good company and hope it goes down 50% so you can buy some more.
Well, that's what Buffett would do, right? I mean, you use the price as your friend. The manic depression of the market is an opportunity for you. I didn't think I was going to be able to buy Bitcoin at 93,000 this year. Now, of course, I could have bought it lower if I just waited 2 more days, but that's the market.
Your crystal ball is broken.
You know this, and your viewers and listeners probably know this, but it's worth emphasizing. If you miss the 10 best days of an asset, so you decide you're going to market time, and you're a guru, and you're going to pick the high and then buy back in at the low, which is impossible. If you miss the 10 best days of the asset, you miss all the returns in the asset. So if something happens here, the Fed says, hey, we're going to cut rates, or the selling a base from OGs, or turns out there's going to be year-end or into January demand for Bitcoin, like a Santa Claus rally into January for Bitcoin, and we saw a $15,000 move in Bitcoin in the next 6 weeks, neither one of us is going to be surprised by that. And so why juke yourself? Why talk yourself out of something? You know what I'm saying?
Scaramucci's conclusion and action. He views the market's current state, with the fear index at historic lows when combined with the stock market index, as a massive gift. He confesses to having done his heaviest buying in years, averaging down from his earlier